When does profit stop being a useful way to judge your business? Because there are times where profit doesn't just fail to help, it's actively misleading. In the Hub video, we talked about how no single number tells you if your business is actually making money. Then we unpacked profit itself, your bank balances, and the difference between gross margin and net profit. This video is going to cover the blind spot where your profit, even net profit, becomes a misleading indicator on the performance of your business. Profit feels right because it's definitive. It's a single number, it looks clean, it looks like an answer. And because profit sits at the bottom of the income statement, people naturally treat it as the final word on their business. But the problem is that profit is just an output. It's not a diagnosis. There are a few situations that are quite common where the profit figure is actually going to be misleading and it stops being a reliable indicator in your business. And the first one is going to be during a growth phase. When a business is growing, the profits will often drop, not because the business is weak, but because the business is investing ahead of itself. And if you use profit in that situation, you can often make good decisions look bad. The second situation is going to be when a business owner does not pay themselves or they are underpaying themselves. In that situation, an inflated profit figure does not account for the actual cost of the value that the business owner is bringing into the business. Other situations where profit is misleading is when reinvestment is postponed. You're supposed to invest into your business, but you keep delaying that decision. Your profit can look good, but long term, your business is going to suffer. A common one that happens on a day-to-day basis is when expenses are delayed or deferred. An invoice comes late and it's not recorded in that time that it's supposed to be recorded. The profit looks good because not all the costs are accounted for in that period. And finally, one-off events. So a one-off event can make the profit look inflated and look good, but it's not a sustainable thing. It's not going to continue happening into the future. In those moments, profit cannot tell you if your business is becoming more resilient, if the decisions that you're taking in the business are increasing or reducing risk, or whether you can repeat the performance of that business calmly without panic. Your profit is going to record what happened. It's not going to tell you why it happened or if you can repeat it in the future. So a useful way of looking at profit is going to be thinking about your profit as a historical record, right? It looks at the past, at what happened, but as a steering wheel for the future, it can be dangerous. In practice, the businesses that are going to do well are the ones that are going to be understanding when to look at your profit, how to look at your profit, and when to ignore your profit temporarily and look at things such as your structure, your business model, your capacity, and your sustainability. If net profit has been the main signal that you've used to determine the performance of your business, our Hub video is going to be useful to help you understand how to tell if your business is actually making money. The frameworks in that video will help you understand when profit is useful and when not to use it. So the next natural question that a founder or business owner is going to ask is, if profit is going to be misleading at times, how do I know when profit is showing me a sustainable, repeatable profit and when it's showing me something temporary? That's what we're going to cover in our next video.